are very, very similar. So I brought with me a S corporation sample, but again, the numbers are going to kind of be same meaningful if you were looking at a sole proprietorship. So the first thing when we receive a loan request as the bank, the first thing we look at is up on top to the left corner, 1120S. That tells us this is a corporation and it's a S corporation. So S corporations don't pay their taxes when they get to the net profit. They flow it through, as the CPA can confirm this, to the personal side, right? So that's why it's important for the bank to know that. The second thing we look at is top right corner. When this corporation was established, 2008, this date is meaningful to us because then we know if you are a startup company, if you are a small business, or you are a medium-sized business, okay? Third thing we look at is line number 1. It's kind of hard to see here, but it says gross revenue or gross sales. This is how much you have sold per 1 year, okay? So that number is very important because if you are in a business like an e-commerce or you are an importer and you need a line of credit because you sometimes need cash, that number times 10% or times 25% is the maximum line of credit a bank will give you. That's why it's important for you to understand what your gross sales really mean to a bank. Yes?
Yes, but some business, kind of business is different. For example, the gold is very high, but the profit is sort of low.
Yeah?
Yeah.
Great question.
Yeah.
Yes, so lines of credit, different than loans, we do care about that number as well as the net profit, okay? Because this tells us roughly how much a bank will feel comfortable in giving you extra cash. So if you are a $10 million company and ask for $8 million line of credit, do you think that's reasonable? Probably not, right? If you are a $1 million company, if you ask for $500,000 line of credit, is that reasonable? Not with the 10 to 25% I told you, right?
Is it more important limit?
The gross sales?
Yes.
Is it important?
Yes.
It's
For
in-
limit, yeah, high level.
No, not really. It just tells us the size you are, right? So under 1 million is considered small. 1 to 10 million is still a small business, but towards medium size. Over 10 million, we consider it a medium-sized business. And we have different rules for different size companies. Question?
Do they look at other factors? Because
Absolutely.
for
This is just line 1.
Okay.
Be patient. We'll get down the list.
Okay.
Yes, so this is the first thing they look at
Okay.
as far as the numbers go, right? Then the second place we look at is line number, I don't know if it's 5, I think. It's called compensation.
Mine said
7, thank you. It's called compensation of officer. This means the money you, the business owner, pay yourself. And we expect to always see a number there. Some of you give me your tax return and there is a 0 here. You don't take a salary. That's not good for the bank. We don't like that. So always consult with your CPA and they will guide you on what the rules are, what's a comfortable amount for you to pay yourself. But the expectation of the bank is for you as an employee of this business to take a salary. Yes? Second thing we look at is down here, line 31, is it?
21.
21? Line 21, called ordinary business income. As you see, sometimes this number is negative. Okay? This is what the bank considers as your net profit. This is how much you are telling IRS out of the 10 million you sold, how much you made. Minus 1,177,000. That's what you're telling the IRS. That may not be the case per your internal books, but this is what you put in your tax return. So we do look at that number. Does this look good?
No.
Negative 1 million? Can I give him a loan?
No.
Maybe. How? If he's not making money, how can I give him a loan? Huh? Anybody? Defend yourselves. You are business owners. You ask for money from the bank. But you tell me you didn't make money.
We don't.
Maybe
We-
it's next month, we make profit next year,
So you want to give me a promise for future. Okay, maybe,
business plan.
maybe. But that's not the answer. I'm going to show you the answer on the next slide, please.
Is it here or slide?
Go to the next slide.
Okay.
Yeah, we're going to skip this for a second. This is schedule, line 1, net income. You see the number there?
Yes.
This number tells us, per your internal bookkeeping, this is actually how much money was left after 10 million sales. Okay? So we care about that. But we also care about if you, as a business owner, took money out at the end of the year, you make a lot of profit, you go, I want to take some of it home. That's called a distribution. We look at that. So this person, out of the 1.1 million positive income they made, they took 650,000 of that home with them. So this business didn't really make $1 million as far as the bank is concerned. It really made 1 million minus 650. So you are really net profit 400,000. And I'm rounding up numbers here, right? Does that make sense? Yes? Everybody with me? Okay. So this is why it's important for you to pay yourself and not take all of that as a distribution. Only take some of that. Because then it leaves some positive income in the business for the bank to approve a business for a loan.
Can the business owner say that I took the 650, but if you approve in the future, I will not be taking this much? Does that?
Great question. Yes, you can absolutely make that promise to the bank. And in fact, sometimes the bank will force you to do that going forward. And yes, we can do that. We can put that in your loan agreement that you promise going forward, you will limit how much you take in distributions. The banks have the right to ask for that, or you can offer it yourself to make a case for your company. That's a great question. Any questions so far?
Also, sometimes we think about that because of we don't want to pay tax, double tax for income my companies and income my personal. So maybe we can make this, get the money my company because of the just want to give one tax.
Correct. That's most of the time why people do it,
Yeah.
is they are trying to avoid paying 2 times taxes. But that's why it's important for you to see how a bank will look at it. So you understand when you need a loan, you need to pay more taxes, right? You can't have your cake and eat it too, right? It's either or. So a lot of times, customers come to me and they say, Kathy, in the next 2 years, I'm planning to buy my warehouse. What are some of the things I need to start doing from now? Because after 2 years, it's too late, right? If you didn't do all this the last 2 years, it's too late to start. So you always pre-plan. If you don't have a need right now, it's good for you to understand this so that you know anytime you need a loan, 2-3 years prior to that, you start behaving in a way the banks like to see it if you really want a bank to give you a loan. This is why I like this exercise, because it kind of helps you understand how they see you so that you know how things need to look like on paper. And CPAs are a great resource to kind of partner up with your banker. I personally always get introduced to my customers' CPAs, and I work hand in hand with them because they also need to know what your plans are, because they're the one that prepare your taxes. They're the one that kind of give you that guidance of how much salary you should take, how much distribution you should take, because I don't know the rules of IRS. Only they do, right? So you need 2 people to kind of help you prepare your tax returns. Not only the CPA giving you safe ways of making the deductions that's legal, but also they need to understand that you're trying to get a loan, so maybe you should take less money here. Right? What other questions?
So you're saying that if we don't make a lot of distributions, make a reasonable, then there will be more cash balance, right?
Mhm.
And that's
More
good for
cash
the-
balance there, because bank is gonna take that number
Yeah, that's good.
minus this.
Okay.
That will be your net profit,
Okay.
right? So in this case, it's what, 500,000,
Yeah.
right?
But if it's different, I mean, I took the money for the down payment. That's totally different, right?
That's different,
Yeah.
that's different. Can we now go to the first page of the tax return one more time? I'm going to show you guys one more thing. This is following her question. This was a great question. So is that 1.1 minus 650, that's it? That's your net profit as far as the bank? Yes and no. Yes, that's how we calculate your net profit, but based on your particular case, sometimes we add certain things back, okay? It's called the add back. It means, let's say in this scenario, we have so far 500,000 net profit. Yes? Everybody with me for now?
Yes.
500,000, right? But let's say this person, this business owner, wants to buy his own warehouse that has an office, and he's going to move into that, okay? So one of the items here is rent. He is paying $401,000 in rent. If he buys his own building, he's not going to pay rent anymore. Can I add that back?
Yes.
Yes. Right? So how much money do I have now? 900,000 to work with. Yes? Okay, what else can I add back?
Depreciation.
Interest,
Interest.
right? Did he pay any money in interest, meaning to the banks?
600,000.
Woo! $624,000, because maybe this guy already has a loan. Can I add that back? Yes. Don't ask me why. Too complicated. But yes, the bank can add that back. What else can I add back? Depreciation. This is when you own equipment, a truck, a forklift, computers, I don't know. You have a Tesla, you call that a business car. That has depreciation. Your CPA will help you to deduct an expense called depreciation. It's just a number. They make it up. They know how to do it. They know the rules. But if you own a piece of equipment, including a car, it's possible to deduct some money. Can I, as the bank, assume you didn't write this off and add it back? So how much depreciation do I have? $918,000. How is this company looking now? Can I give them a loan?
Yep. Oh, yeah.
You see how it works?
Assets 3.6 million. Does that help at the?
It does, it does. And don't get me wrong, we look at everything here, right? But I'm trying to simplify it and show you the highlights as the first time class.
Absolutely.
Yeah.
Hopefully we'll do more of this if you guys like it. Hopefully we can do more and I can go more in depth. But yes, that asset is an important box because that tells us what are some of the things this company owns. It could be they own a building already. It could be they have good inventory, bunch of electric bikes. That has a value. So worst case scenario, if he gets a loan from me and cannot pay me back, I can go take his scooters. It's worth something, right? So I can sell that. So that's why the assets are important to the bank as well. It tells us what the company has.
So kind of technically this minus negative 1.7 million, realistically speaking, with these add backs, so it's not too bad when we go into details of the tax return and how much cash in hand.
Exactly, exactly. Sometimes people have positive net profit here, but then you go to the section M1 and they show negative there. That's not good, because that means really the company didn't make money. But if I see a negative here, immediately I go to M1, and if I see positive there, still hope. There is still hope for that company, okay? So it's very important you guys understand how your CPA is doing your taxes. They have different methodologies, they use different ways of these deductions that are all allowed for a business to do. But if you don't understand the items that a bank can add back, then you don't know how to maximize it. Right now, you learned two things that any of you that own a business can use: depreciation, interest. So don't be afraid of having a loan, because it's a great deduction on your taxes, yet the bank will add it back as if it never left the net profit, right? So now you know, if you want a loan in the future, but also don't want to pay too much taxes, you have at least two categories. You can put a lot of numbers here for the years you need the loan. That's at least one thing within your control. But you have to consult with your banker and consult with your CPA so that they can guide you how much, because it's different for each business. Different case by case, industries, it has many, many criteria. Yes? Any other questions? No? Was this helpful?
Yes. Oh,
Very
yes,
good.
100%.
Good.
Every business owner needs to know this.
Yes, it's
80% don't.
Yes.
Right.
And that's all I have for you guys.
Okay.
Thanks
you,
for
Kathy.
waiting till the end.
No problem. Thank you so much.
Next time put
Kathy.
me first.
I will. We'll learn. We'll learn. Great. Thank you, Kathy. Appreciate it.